You're with us here on a fresh new edition of Mid-Cap Radar. The market is up and away, 11,441, almost a 100-point gain. The Bank Nifty is looking strong, 1.6%, outperforming as it has pretty much every day of this week so far. And mid-caps and small-caps, which were, actually just sulking last 2 days, are also up in the green. 0.5% on the mid-cap index, 1/3% on the small-cap index as well. There are a bunch of reasons. Equities in the region, when I say region Asia, were mostly higher, mostly in the green. We'll get European first rates. Specifically to India, as Nimesh has been pointing out, there is also this passive inflow of about around $300 million because of the FTSE rebalancing, which is coming our way. So that could explain the surge that we are seeing in a trade today. But we'll, of course, track the rest of the globe. Europe should be starting up right now. Sumira, afternoon.
Hi, Prashant. Good afternoon. And, in Europe, the cues are pretty positive, actually, because UK lawmakers have voted to delay a potentially chaotic, Brexit by at least 3 months. So on account of that, that should come as a bit of a positive that there could be a deal in the offing still. So for now, Brexit could be delayed by 3 months and the FTSE higher on that account. Also, the Chinese Vice Premier has spoken with the US Trade Representative as well. So I think investors will also want to monitor what's coming out of there. But
okay, we've got Sandeep Wagle joining us to run us through what he's making of the market. Sandeep, good afternoon. So it's a 90-point up move. Would you like to fade it, or would you like to go long here?
Afternoon, Prashant. I would be more stock specific. Nifty, I think, will not give you that many opportunities. If you get a 20-30 point correction, I would still buy the Nifty. And maybe 50-60 point correction, 70 point on the Bank Nifty, that can also be bought. And there is a very clear up move which is going to continue. But stock specific, there are opportunities. I would go with a buy in a SRF. Very high open interest and on the verge of a breakout. Buy it with a stop loss of 2385 for a target of 2448, and a buy in a Kotak Bank that is showing strength. Stop loss of 1308, target 1395.
Right. Okay. We discussed IndusInd last 2 days, Sandeep. 1700, past 1700 essentially. What can it get to in the current leg?
Well, Prashant, I don't see any weakness per se. The only problem is it has moved from 1500 to 1700 in a span of just 3 or 4 days. But still, I would say that the move should continue. 1750, 1760 is where I expect the stock to test, maybe today, maybe by Monday.
And Kotak, eventually you expect it to go back to the 1450 kind of levels?
I would expect it to go to 1500 plus levels. I see that momentum in Kotak, what I was seeing a couple of days back in IndusInd Bank.
Right. The momentum in Yes has broken, or you think it's just a pause, just under 250?
Some corrective move is happening today. As long as it stays about 237, 238, currently at 245, I would still remain long, and my targets of 270, 275 are still intact.
Fair enough. What would, TCS, do you have a trade going? 3.5 higher?
TCS was a trade in the early 12:30 show, and we still are on. We have recommended a buy to our clients, and I expect TCS to take out 2100, 2120, 2130. That would be the target over the next day or two, maybe Monday or maybe Tuesday.
Look at IIFL as well. It's a big move today. 7-8%. Does it take out any recent important levels? Does it is it set up for more?
Prashant, this space has been outperforming. A lot of stocks in this space have moved over the past few days, and IIFL is one of them. But at this level, some little bit more at 447, 448, I would talk of a move towards 460, 465. But definitely you are not getting in at the bottom or in the middle. At around 470, 475, the rally can tire out, and there one, I think, should book profits.
All right, Sandeep, thanks very much for joining in. Let's get in some fundamental opinion as well. Earlier this morning, we caught up with Vineet Sambre, the head of equities at DSP Investment Managers. He says there is a slight deterioration in the micros and the fundamentals of the market. But on the positive side, he's looking at autos and NBFCs. Hear him out.
We may continue to see volatility probably till the elections, because while macro and the top-down may be looking good, but when we look at the micro picture, the fundamentals are slightly deteriorating. We are seeing demand slow down across few segments, and hopefully these demand trends should strengthen post-election. So I think till such time we have the slowdown being sensed across few segments like automobile, infrastructure. Now even some of the consumer staple companies have hinted at some slowdown in the rural areas. I think those are going to create the fundamental imbalance, and which is where we believe that the volatility could continue. We have exposure to some of the auto names and also the auto ancillary, and the way we are sort of thinking about the whole auto sector as such is that there is going to be a big regulatory change, and we all are aware about the Euro 6 norms which are going to get implemented in April 2020. So the sense here is that the auto sector will see one demand up move before that gets implemented, because there should be pre-buying before that. So the long-term story remains intact. We have a lot of ground to capture here in terms of the low penetration, and hence we continue to hold a positive view. I don't think that the worst is still behind. We will have to see through the next 4-5 months really before we start commenting on the strength of these NBFCs coming back, or the liquidity challenges abating. But my sense is that we have been selective in terms of owning a few businesses where we felt that the liquidity issue is not going to hurt them as much, where the business metrics tend to remain strong, and these NBFCs, some of them have the pricing power.
All right, and here's a quick note. You can secure yourself and your family with life insurance. So CNBC-TV18, in partnership with ICICI Prudential Life Insurance, has launched a new initiative called Mission Insure India, Insurance for All. This is a 6-month-long campaign with the objective to create awareness and disseminate knowledge about life insurance and the need to protect you and your family. As part of Mission Insure India, we celebrate the 15th of every month as Protection Day, a day dedicated to inculcate the thought of protecting your family's future. With mid-cap radar, the one stock that has been in focus through the day is Sterlite Tech. So that stock has seen a big crack today as the China mobile tender for optic fiber cable saw pricing decline of 50%. Rima, my colleague, is here to take us through the details. Hi, Rima. What kind of an impact does this mean for Sterlite Tech?
Yes, big cut on Sterlite Technology. The reason is China Mobile held a tender for optic fiber earlier this week, and the outcome of it actually shocked a lot of investors, because optic fiber cables saw a 50% drop on a year-on-year basis, much lower than what the analysts were anticipating. On the back of that, Haitong has downgraded Sterlite Technology to a neutral rating from a buy rating. They've lowered the target price to 235. They see a high risk of a substantial pricing erosion in the global optic fiber market in the next 1 year on account of excessive supply in the Chinese market, which is why they're revising down the pricing of optic fiber as well as optic fiber cable in the coming 2 years. And they've also cut down the FY20 EPS estimates for Sterlite Technology by 30%. In fact, FY20 EPS, according to them, for Sterlite Technology will be lower than what they're likely to report in FY19. So net-net, on the back of excess supply of optic fiber as well as optic fiber cable in the Chinese markets, the pricing for optic fiber could come under pressure in the coming few years, which spells bad news for Sterlite Technology, which is why that stock is under pressure today.
We spoke with the management as well of Sterlite Tech on the matter. Listen in.
So I agree the China mobile tender, which has recently come, is in a lot of focus right now, but structurally everything is right in play the way it had to be. There is a temporary supply-demand mismatch because of the delay in China mobile tender, but especially only in China. So China for us is about 6-7% of the business, which is going through a structural shift, but it's not there for long. So for us, our margins are now the business is optical fiber business, plus a large proportion is also coming from our services and software business. And the margin profile for that, I mean, if we see our order book of about 10,000 crore, almost 5,000 crore is now coming with services and solutions business. We've been growing at about 35 to 40% revenue growth year on year for the last 3 to 4 years, and we believe that will continue for the current year as well as next year.
All right, so more stocks in focus. We understand from sources that the L&T board may have cleared the acquisition of VG Siddhartha's stake in Mindtree. So my colleague Mugdha Warrior, who's tracking that story, joins in with the latest. Mugdha.
Yes, you're right. The L&T board has approved the acquisition of the Mindtree stake, and L&T is likely to pick up 24.4% stake in Mindtree at rupees 981 per share. Now, we understand the term sheet with VG Siddhartha will be signed as early as Monday, and our sources were telling us that this deal was set to be closed today, but some technicalities have pushed it to early next week. And VG Siddhartha will be selling his entire 20.4% stake that he holds along with his CCD entities. But, there are some other minority shareholders which will also be selling to L&T, which include Mansa Capital, a shareholder named Rekha Shah, and of course L&T MF, which holds about 1.08%. So these shareholders will also be selling either entire or part of their stake to L&T, and the total stake will come up to about 24.4% is what we understand. And our sources are also telling us that L&T is looking to hike its stake in Mindtree to 51% through a voluntary open offer. That's what we have today, and this is an exclusive. So finally, after months of speculation, this deal is set to be signed by Monday.
Okay, so in a couple of days, we'll have a deal. And as Mugdha pointed out, the L&T board at least is on board, is agreed to acquiring a stake in Mindtree. First 24% plus, and then a voluntary open offer, which gets them up to 51%. Mugdha, thanks very much for that. We will slip into triple-digit gains, 100 points, absolutely steady. Let's focus on some brokerage notes now. Anisha is here with what the brokerages are saying on cement and a couple of other things as well. Anisha, over to you.
Well, yes, Prashant, thank you so much for that. Over the last few weeks, we have seen a bit of rally in the cement stocks because there was a news regarding a price hike that was taken, especially in the southern part of the country. Now we are getting a report, and this is what BofA has really observed, that some of that price hike has been rolled back, especially in the southern end of the country, and that is because of muted demand. So they suggest that the price hike that was taken in February was anywhere between 30 to 50 rupees, and now there has been a rollback of anywhere between 10 to 20 rupees, making the net effective increase somewhere around 20 to 30 rupees. So there is still a net increase, but it's not as much as the street was factoring in. Now, apart from the southern side of the country, as far as the western region is concerned, they see that the price is capped there because of the surplus capacity in the southern part of the country. And when you look at the northern as well as the western and the central part of the country, there is going to be less demand in March because remember, it's the month when we have those holy holidays and a lot of labor really goes on extended leave, and that means the construction activity slows down. So all of this makes them believe that at least in the near term there will be a bit of cap when it comes to prices, and even for the next 12 to 16 months they see a bit of price remaining steady around the current levels. They have an underperformed rating as well as Ultratech Cement as well as Shree Cement is concerned. We had a word with one of the experts today as well, Mr. Ladiwala, and he says that even though the price is steady in most part of the country, the volume is picking up, and that I guess is a bit of positive. Back to you.
Okay, Anisha, thanks very much for that. Some news flow coming through on DHFL. Remember, the stock had rallied when there were reports that the NHB as well, their audit had given them a clean chit, but now sources saying that that audit itself is currently underway. But let's focus on some more brokerage reports that came out earlier this morning. Mangalam is here to give us the lowdown. Mangalam.
Well, I have CLSA talking about IndusInd, and they're positive on it because they've restated the company's numbers, including Bharat Financial Inclusion in terms of their overall merged entity calculations. And on the back of that, they are positive on the stock. They maintain their buy rating because they believe that Bharat Financial Inclusion synergies as well as normalized credit costs on account of provisioning for the island FS exposure is will will take the company's return ratios higher in FY20, where they see the return ratios or return on equity move to levels of around 20 to 21% with an upside potential. So in terms of the Bharat Financial Inclusion synergies, we have they're working with a number of close to around 150 to 200 basis points lower credit costs. At the same time, there would be some capital efficiency coming in. Other synergies include the likes of OPEX or operating performance synergies, as well as retail deposits and fee pools. They shift to the merged financials and expect 20 to 21% ROE on that. The other one that I'm tracking is Jefferies on Bharti Airtel. They believe that irrespective of the rights issue, the pricing competitive pressures are still a long way to go. They've downgraded the stock, and they have a target price of 270, which they've cut from 280.
Mangalam, thank you very much for running us through that list. Appreciate it. The market's picked up a little bit more steam, 114 points now. And look at the Bank Nifty, which is at the day's high, and I think it's added on about 0.4% or actually 0.3% from when we started at 130. I mean, yeah, you can see that spike which has come through, 550 points on the Nifty Bank. So this is some serious stuff now going on. Let me just quickly take a look at the top gaining banks on the Bank Nifty. So Kotak is now up 5.5%. 1335 on Kotak Bank. When actually, when I think Sandeep put his call out, it was at least 20-25 rupees lower from where it is now. IDFC First Bank is up 3. Federal Bank is up about 2 3/4. PNB is up about 2.7. State Bank of India and ICICI Bank are up about 2%. So actually, there's only one name in the Nifty Bank Index which is down, and that is Yes Bank. It's at about 246 or so. But this is once again Bank Nifty ahead. In some sad news, tragedy struck Mumbai again. 6 people killed and 33 injured after a part of a foot-over bridge collapsed near the CST station last evening. Yash Jain is joining in with a ground report. What's happening there? Yash, over to you.
Well, the unfortunate incident happened sometime in the evening yesterday, around 7:30 p.m. in the evening, where a part of the footover bridge in the CST area of Mumbai collapsed. In fact, right now we are at that very spot close to the footover bridge, and if I could just show you that very bridge, a part of this very footover bridge collapsed down, taking down the people who were using this particular bridge to get on the other side of the road at that point of time, also having its impact on the motorists who were getting to the other side of the bridge and were under that very bridge at that point of time. Of course, immediately after the incident took place, NDRF, Mumbai Police as well as the Mumbai Fire Brigade team were rushed to the spot, who got involved in all the rescue operations which went through the evening, through the night. As far as the situation today is concerned, the NDRF team was pulled out as the rescue operation came to an end, and as far as the latest reports are concerned, about 6 people have been declared dead and about 30 are seriously injured, who are being treated in various hospitals in this area, in the vicinity. Also, something which I have been picking up as far as the officials here are concerned is that at the time of the incident, the traffic signal which is just adjacent to this very footover bridge was on, because of which a lot of vehicular movement was halted because they were waiting for the traffic signal to move so that they can move forward, and that in some way reduced the extent of the tragedy. So of course that was something which a lot of officials have been talking about. But overall, as far as the action is concerned, Chief Minister Devendra Fadnavis also visited the spot today morning. He was briefed about the entire incident. The government again has very categorically said that a structural audit of this footover bridge was done just about 6 months ago, and when an incident of such sort happens within a period of 6 months, of course it's bound to raise a lot of questions when it comes to the quality of that audit and so on and so forth. But as far as the action is concerned, an FIR has been registered against railway officials as well as BMC officials. The whole political blame game has begun, but of course the harsh reality remains, exposing the sorry state of the infrastructure of the city one more time.
Yash, thanks very much for that ground report. We'll wrap up on Midcap Radar, and up next is our insurance special. Stay tuned.